Hello, everybody, and welcome to this conversation with our clients. With me today is Pragnesh Desai. Pragnesh runs our portfolio management business, Galileo Asset Managers. Pragnesh, welcome.
How's it, Theo? Super duper exciting times, right? Very interesting outcomes. Your thoughts?
Yeah, it is indeed interesting. We've had the election, and I want to start with just a few principal points. The first point is I want to quote Warren Buffett. When Warren Buffett says that, remember, any prediction tells you more about the person making the prediction than about the future. And we are now in that space. Be very, very careful for predictions. The next 2 weeks will be volatile. And the next 2 weeks, we will be bombarded with fake news, with horror stories, not only from quasi analysts, but also from some of the political parties. Remember, this is a posturing for a role, for positions. And I think we need to be exceptionally careful who we listen to and what we attach value to. I think one will also find a bit of volatility in markets, but I don't think that is something to that is not something that is completely out of line. That is what you can expect. So expect volatility, expect a lot of predictions from people that should not make predictions, and expect news that are fake, absolutely fake. Now, if I then go to our house view portfolios, and I'm going to, whatever the product underlying to that is a specific asset allocation and a specific structure in a portfolio. Now, if I just take the underlying balanced house view portfolio, remember, firstly, around 40% of that portfolio in any case is offshore. That means 40% within the portfolio, within the current guidelines, rules and regulations, is invested offshore. The balance of the equity portion of that balance, probably 50 odd percent, is also assets that are offshore. That's price and value is determined offshore. So in that perspective, you add them together, our house view portfolios, whatever the structure of the product is, if that's an annuity, pension fund, direct unit trust, that is roughly 50 odd percent offshore in any case. So that reduces the risk and is almost structured in a way to manage uncertainty. Now, if you invested directly offshore with one of the offshore portfolios, that money is obviously out of South Africa. It's jurisdiction remote. It's got nothing to do with South Africa. And the performance in those portfolios are fairly and square dependent on international markets and how they perform. But within that portfolios, there's also certain structures. And I'm going to bring in Pragnesh now. I'm going to ask him two questions, but I'm going to start with the Rand. We seen the Rand a month ago quite weak at something like 19.20 to the dollar. In the last month, it moved closer to 18 to the dollar, but we're somewhere in the middle of this volatility. From your point of view, Pragnesh, the drivers of volatility in the Rand currently, how do you see that?
Yeah, so undoubtedly the rand, is a currency that we are all very emotionally attached to as South Africans, and the rest of the world also is very attached to the rand because it's one of the most liquid emerging market currencies with lots of depth in terms of trading positions. So yes, you can say that in the last 3 days, the rand may have weakened as a result of political outcomes and heightened political risk in South Africa. But there was another factor that drove it around Thursday, Friday, and that was the outcomes in the US economic data, right? And also, commentary by certain Fed officials that, well, maybe we're not done raising interest rates. So the moment that kind of scenario comes into play, in any case, the Rand would have weakened. So, it's difficult to say how much of the rand's weakness in the last 5 days is a result of our politics or is a result of the American economic outcomes being repriced. But be that as it may, what drives the volatility of the rand typically is what happens in the US predominantly, and then our own headlines. And right now, none of them are helping. And that's why we are where we are.
And the problem is, with uncertainty comes volatility. I want to take the discussion to your international portfolios. The portfolios you manage offshore obviously also has elements of how do you manage certain outcomes, or how do you manage risk. Can you elaborate a bit on that?
Yeah, so no one can predict markets, right? So the best that one can do is to follow a portfolio construction method that tries to, uh, you know, address certain scenarios, right? So recession, yes, no, interest rates, high, low, uh, black swan events, yes, no, when. So if those are all the drivers of markets, then the best thing you can do is to construct a portfolio that says what kind of protection can you buy at a relatively lower cost, and but not losing sight of inevitable opportunities that arise in markets, right? So if you look at the last 2 3 years, people have said, oh, recession, high interest rates, but just look at where the equity markets are, right? So we have to always construct a portfolio that we'll try and capture some of these waves. We'll try and cover for some risk outcomes that actually do materialize. And that's how we've constructed this portfolio, right? So clients who are in the balanced portfolio would have noticed some of those movements in their portfolio as time goes and depending on the narrative in that month.
Yeah, and I think the key, Pragnesh, just to add on that, diversification means that everything in the portfolio shouldn't go in the same direction. Otherwise, you're not diversified. And that's the key element. But Pragnesh, in this uncertain times where we are locally, given that the next 2 weeks will be volatile, we get bombarded by different news sources, what is your advice?
So my advice is that I'm sure you have a plan. You've made a plan with your advisor, right? I think stick to that plan, right? If it requires adjusting, we can only do that, and we should only do that once we have certain certainty, forgive the pun, on in the next couple of weeks. But until then, I think we've always followed a construction method that says diversification is your friend, and to the extent that you're sticking to that plan, I think you're well covered, right? So like you said, don't give in to rumors and all that. I mean, tomorrow morning you're going to see quite a bit of drama any case in the markets or on the rand, right? And different speculations driving different things, but ultimately it comes down to a long-term plan, sticking to it with discipline, and I think 9 times out of 10 you'll come out better off.
Pragnesh, thank you very much. I want to emphasize that point. And be very careful who you listen to. Be very careful whose views you take seriously. Stick to people with a long-term track record of deep underlying knowledge of the political environment in South Africa. Don't get caught up in fake news. Don't get caught up in those people that 3 4 years ago, or 4 or 5 years ago, they were specialists in COVID and vaccines. Today they're specialists in coalition discussions. Don't listen to those news on social media. Stick to people that know what they're doing and that's got a sound, fundamental academic background. And let's hope for the best. Let's hope that in the next week or three, we will get clarity. And remember, we will get back to you if there's anything that we really think one should act on. In the meantime, do not get caught in short-term volatility. All the best.
All the best. Thanks.